So it's about 2 weeks after the Terra Luna collapse, and although it seems like the major cryptos and everything are holding up relatively well, despite that little scare with Tether, I think it got like depegged like 6 cents or something off the dollar, but ever since then, everything's been looking pretty fine and dandy. But there have been some sort of hidden cracks uh, that have formed from this situation. So, if we look at the phenomenon, pretty much happened from May 9th to May 12th is when the majority of that fall happened. It went from like $64 to fractions of a penny, right? But um, Bitcoin and everything else have relatively been okay despite this. However, one thing that happened that's interesting is with the company MicroStrategy. So, also during that time between the 6th and the 12th, it fell substantially, about 50%. This May 12th date being very specific because if we look at it on here, um, let me just double check that you can see. This candle right here on the 12th got as low as I think like 130 per share, pretty close to 125 per share that day, and right now it's at 193. So this candle on the 12th was a big deal. What came out on that day was some extra put options, some extra derivatives at lower strike prices um, were created on that day. So specifically these long duration, far out of the money puts. So here is a daily candle of the January 19th, 2024 10 put. Oh, I guess it's like an 8 hour candle, but that's fine. And as you can see, it was created here on the 11th. So that was like the worst. Well, the 12th was the worst day. So it was created here, and then you see on the 12th, it got up to a price of 430 a contract. So what's significant about that is on the 12th, when it traded for as low as 125, the market was implying that you would get a so you could sell the contract for 430 and your max loss would be this minus 1,000. So your max loss would be 570. So it's pretty close to like a one-to-one risk reward on either the company staying afloat or the company going completely bankrupt. That's what this option market is implying. So if you thought there is a greater chance than 50% of the market or of the company MicroStrategy not going completely belly up, then you would want to sell this contract. But there's a lot of fear at that time of like what the ripple effects would be. So even though the contract is not as high as 430, it's still very, very high, trading at around 260 here. So it's the option market here is implying that um, there's a 1/4 chance that uh, this company will trade below $10 about 2 years from now, which is kind of insane to think about because you have this um, God King, uh, what's his name? Michael Saylor, right? And this guy is just proclaimed as some sort of genius, but um, market says otherwise. The market is implying that there's a good chance that his company will go completely bankrupt. So if you are slightly bullish at all on crypto, Bitcoin specifically, then you would want to consider selling this contract because the risk reward here is insane if you are somewhat bullish on it. What this says to me is that the management and Michael Saylor specifically for coming up with the strategy of just buying Bitcoin and hoping that it'll boost his software business sales is completely idiotic. Um, no, the, you don't want the option market implying this about your company. That's terrible, right? And if you think the option market is completely wrong here, then you would want to build a strategy around that assumption, and you would get very, very high risk reward ratios for that. Um, but if we compare it to another stock, so this is a 10 put on MicroStrategy, so this would be like a 95% drop. So let's look at something like Tesla. And we can go out a little bit further in time. And let's see, it's at 600 right now. So a 95% drop would be around 30. So this is a way different ratio. So before we could collect a credit of around 250, max loss would be 750, but here it's 85 to 2,915. So what they're saying is there's a less than 1% chance that the company will be below 30, um, like 2 years from now, right? That's normal, right? Because, I mean, it's a good company. But when you hold a leveraged Bitcoin position like a fucking moron, this is how the market treats you. And you can see that in this light blue line, this bell curve shows the probability that the option market is giving for the stock price over this time period. So, where's the one? Yeah, this thing is all over the place. So, the one standard deviation, I don't know how accurate this is, but the one standard deviation is apparently between 130 and 1200, which is pretty wacky. Yeah. But the fact that this has so much value is frightening if you're bullish on Bitcoin. Maybe not as much as you think because just the structure of this company is not Bitcoin itself, right? It's a leveraged Bitcoin position, which has its own problems and is also idiotic. Um, I went over that in a different video, but I'm gonna keep talking about this because this is a little troubling, a little weird. Peace.